This is our Forex blog for February 22nd, 2013. And one of the easiest ways of trading, in my opinion, is using our indexes. We have the dollar index, the euro index, the pound index, the yen, and of course we also have the other ones like the CAD index, the Australian index, New Zealand index, and so forth. So basically you can see the CAD is very clearly trending down. The gray line's hourly moving average, a 15-minute moving average is in green. Previous day's low for the index, previous day's high for the index, and the value area. If you're familiar with market profile, the value area is the price most CAD pairs traded during the previous day. So when the currency is underneath the value area and its hourly moving average, two really wonderful filters, the trend's likely to be down. When it breaks the previous day's low, it is a major sign that the trend's likely to be down. And then we have our containment bands on here. When it gets underneath these containment bands, you want to look for a reversal, such as when it's falling here, you can see incredible weakness, even more weakness, double bottoms right here with no weakness. Guess what? That's the end of the move, and look what it did the rest of the day. So in a nutshell, when you see a currency that's super weak like the CAD, you want to find a very strong one to sell the CAD against. Now if the CAD's on the top, and let's say the yen's strong, you would sell the CAD yen. If the strong one is on the top, then you would buy the strong one versus the CAD. So let's go through the currencies and try to find first with the dollar. You can see the dollar made lows, and especially once it got above its hourly moving average, and it proved by retesting it many times. Oops. You can see a few times retested. When it breaks over the high, and you can draw trend lines on these charts, which work wonderfully. When it breaks out here at 8:30, it's extremely likely to at least go up to the point of control, and you can see the upper containment band's very far away. It's got a lot of room to run. It's worth taking a risk buying the dollar against one of the weak ones at 8:30 here. Now let's look at the CAD at 8:30. It had just fallen off, and probably the dollar CAD's been trending up all day. This one's right at the lower band, so you have one more likely move down. Most of the time currencies don't go outside the bands for very long. You can see about a half an hour here. So basically you bring up a dollar CAD chart and you want to buy the dollar CAD. You want to look for buys in the dollar CAD at 8:30. Here's 8:30, and guess what? You can see it just recently broke out over the highest high of the day, and it's got a little flag pattern as it sits in a very narrow range, and it breaks out, and you can see it went from 0210 all the way up to 50. It's a 40 pip move, and if you missed the first move, you might have bought this little pullback right here and drew your fibs off that swing to know where your profit target is. And anytime, whether you took the first trade or even the second one, if you're risking a very tiny amount, first trade you're risking this, second trade you're risking, you buy that little breakout right here, you put your stop right underneath the low. Anytime you take a trade where the likely profit target is 1.5, 2 times bigger than what your risk is, you got to pull the trigger. It's that simple. Now that we know the CAD is weak, and especially when it broke underneath the low here at 4:30, very weak, let's find some of the other ones that were strong. This one really was underneath its hourly. I wouldn't necessarily trade it against this, but earlier in the day the euro was going sideways. It's above its hourly. It's above obviously the previous day's low. The euro CAD, when the CAD went down, euro CAD is very high probability one to buy, and you can see it broke out right here. It went up about 20 pips. You buy the little pullback, you might have made 10 pips on that. That's not the best example. This one's chopping around. Swiss, no real action here. You can see the Australian, very strong, pulls back, finds support at the hourly moving average. The trend is clearly up. The daily trend's up, the weekly trend's up, the monthly trend's slightly up. The Australian CAD probably, when the CAD gets super weak, would have been one of the better ones to buy. And you can see, basically, in a nutshell, when this thing broke out right here at 0490, it went up to, it looks like around 75. went up 85 pips. And you have many opportunities to get in this trade, especially with this nice little pennant pattern right here, which is a low volatility pattern. The market has high volatility and it gets smaller and smaller and smaller. Breakouts are very likely to happen, and it's also probably 80% likely, 75, 80%, 70% at the low, and likely to make its way up to the first or second fib target. And you can see almost to the pip it hit the second fib target. So because the daily, weekly, monthly trend are all up in this one, in the Australian, you have a good chance of making this as your profit, even if you got into this trade a little bit late. And your risk, when you buy it, when it goes above this, it's just simply a few pips underneath the low. So you have about a 4 to 5 times bigger likely profit target than your risk. And that's really one of the benefits of trading using, this technique. So let's look at the top 4 currencies. And I'm going to hit the minus key to zoom out and see more of the day. There's a couple events that are very high probability. You can see, for example, that the pound was going sideways all day, broke out at 7:30, pulled back, tried to go higher, failed to make a significantly higher high, and once it came back into the previous day's range, it's very likely to go down. So from 10 o'clock onward, you can look to sell the pound. By having the currency chart of all the pound indexes, you can take trades that most people wouldn't do in the pound. You can see the weekly trend and the monthly trend on the bottom are down, very strongly down, dark red. So when it breaks down from this little sideways rectangle pattern at 11:30, very high probability one to be selling. Now, the dollar was going sideways and broke out to the upside. So did the yen. At 11:30, they're both kind of pulling back a little bit, but the weaker of the two are likely to make the currency go. So even though the dollar might be going down and the pound might be going down at the same time, the dollar has a stronger weekly and monthly trend. So I would take a sell in the pound dollar at 11:30. Here's 11:30. The market's kind of going sideways. Here's the previous low, by the way. Here's 11:30. Got into this trade a little bit early. And let's kind of zoom in a little bit, because this is a decent number of pips, even though it doesn't appear that on the chart. 52.65, it makes its way down to 40. It's a 25 pip move in an hour and a half. And you can also go down to a 5R chart, which is 5 pips per bar. And it's a wonderful way of getting short. You can see it kind of went down. You can draw a trend line over the bar's high and you're out. Gone short again here, small profit, short again here, small profit, short again right here, small profit, short again here, and then just massive profit on that last one. It fell about 60 pips. And of course, you can use our chandelier stops and some of the other tools we have. I also like our displaced moving average 5-period shifted 5 bars to the right. Click DSP. I like to make the bars 2, and you can see this makes an excellent entry and exit method.